Mrs. Dnyanada Kulkarni.
Hi.
Market analyst, senior research analyst at Century Financial is joining us. Welcome, ma'am, and thank you. Let us first take a look at the markets. We can see, of course, that there are some setbacks in the UAE. Do you believe that this is, of course, an expectation of the upcoming quarterly earnings results for the Q1 or for the Q2, the second half of the year?
Hi, thank you so much for having me. As we've seen, stock markets across both Dubai and Abu Dhabi have traded at all-time highs as of yesterday. And the small pullback that we saw in today's session is mainly driven by profit booking. But overall, the sentiment remains highly upbeat, especially with the earnings about to be released very soon, second quarter earnings with big banks kicking it off. The expectations are very strong and high. If you look at the first quarter performance, we saw a stellar performance across both the traditional sectors as well as some of the newer tech-driven sectors. If we see companies like Presight AI and Space 42, they achieved a year-on-year revenue growth of 115% and 271% respectively. So these expectations have carried forward into the second quarter. Banks are also expected to do really well, especially Emirates Islamic Bank, and we've got Abu Dhabi Islamic Bank, where we can expect that they can deliver year-on-year revenue growth somewhere between 18 to 20%, and the same can be said for FAB, Emirates and BD, that they can achieve a revenue growth somewhere between 9 to 12%. So the expectations remain very strong.
Let us now move to another relevant topic. In a survey that we have conducted here at CNBC Arabia, we can see that the corporate banks have actually, and their profits have relapsed. We want to know why this setback, the drop in the earnings, and to what extent you believe that this could affect the bank's movement across markets.
Right. So banks have been doing pretty well. If you see, the Federal Reserve has held interest rates steady for quite some time. And because of the currency peg between the dirham and the US dollar, we've seen higher interest rates here in the UAE as well, which has driven the net interest margins. Moving forward, the expectations is that there will be maybe 2 rate cuts later this year, which could pressure the net interest margins of banks. But we expect that to be offset by strong credit growth and lending activity, especially across the corporate segment as well as the SME segment. There are a lot of mega projects taking place across the UAE and hefty investments for developing sustainable infrastructure. So all of that will require a lot of financing. So banks will see strong activity because of that. We've also seen an influx of people coming in from across the world, which has increased the demand for personal loans, credit cards, as well as deposits. So any setbacks that we're seeing are likely to be offset by these factors.
Ma'am, let us now move to another vital and strategic sector, which is the real estate. Amidst, of course, all these changes and amidst the geopolitical tension in the region, we have seen, of course, the interest rates result. How do you believe this to affect the real estate sector?
I think the real estate sector is doing brilliantly. In fact, if you see over the last 3 months, the real estate sector generated a result of 6.61%. If you look at the first quarter earnings of the big names like Emaar Properties, Alder Properties, it was anywhere between 25 to 30% or even higher, and that expectation is continued into the second quarter as well, especially because the demand for real estate remains very, very strong, both across residential properties as well as commercial properties. And because of all these projects that are taking place, and we are seeing a lot of new people coming in, expat population is increasing. So I think the real estate sector is expected to do brilliantly, especially Dubai is at the forefront of the branded residential property market, if you see from the latest surveys.
Thank you very much, ma'am, for joining us. It was a pleasure having you.